Hi guys, welcome back to Trademanza's weekly educational video. In last week's video, we explained to you the basics of trend analysis and how one can use indicators such as moving averages to predict whether a stock or the entire market is in an uptrend or a downtrend. Today, we are going to be using the same moving averages and a few other indicators, and we're also going to talk about what is support and resistance. So let me go right here and add those indicators. Moving average, and here we have it, and I'm going to add two moving averages. In our first video we explained how you can change these things as well, so I'm going to make it 22-day moving average, and I'm going to make it dark blue in color, and then I'm going to make the second one into a 50-day moving average. Let me just go ahead and make it into 50 here and change it to a purple color and make it a little bit thicker. Yeah, let's go. So here the blue line we have is the 20-day moving average. As we can see, most of the times when the market is in an uptrend, in every swing, a swing is referred to an entire up move and then a down move as well. When a market is in a very strong uptrend, it takes continuous support at the 20-day moving average, as we can see here, rebounds back up, touches it again, then rebounds again. When the 20-day moving average is broken, the next thing one can look towards for a support is the 50-day moving average. Here we can see that the market took support at the 50-day moving average a few times. It goes up again. Here it consolidates for a while, and as soon as the 20 and 50-day moving average come together and interact with each other, the market shoots up again. Here again we can see it taking support at the 20-day moving average, 20-day, 50-day, it's taking support here. And now this is a clear sign of a trend reversal. What's happened here is that not only has the market made a lower low and lower high in the last swing, it is now taking resistance at the moving average. Here it takes resistance at the moving average and goes back down. Again it takes resistance at the moving average and falls back down. Now this part is going to be interesting here, as it is taking support at the 20-day moving average. However, there is some resistance from the 50-day moving average. So one should wait for a couple of days to see how Nifty interacts with the 50-day moving average before deciding whether to go long or short. Now let's switch up to a different time frame to talk about some basic things such as support and resistances. Okay, the markets are very choppy in this region, so let's try to find a better area. Yeah, I think this region here is a good example of what support and resistance could be like. So I'm going to go here and plot these lines. This is going to be our resistance level, and this here is going to be our support level. So the question that arises is, how should one trade close to these important regions, which can be the resistance or the support? What one can do is wait for some type of interaction near the resistance. As we can see here, first there's a very big green candle, which indicates that there are a lot of buyers and there's a lot of buying pressure. As the market is slowly going up, we can see that the size of the green candles is decreasing, and with passing time, the amount of wicks at the top of the candle, this thing here is called the wick, is starting to increase. This shows that there are finally now sellers coming into place, or people are booking profits in their long position. Now here what happens is, we have this one red candle, another green candle, and then another red candle, none of which are able to make a new high, and all of which have really high wicks on the upside, indicating that there are some sellers. What one can do is, after this red candle is completed, wait for the starting of the next candle, and as soon as the low of this previous candle is taken out, one can take a short position with this or slightly above this. Remember how we spoke about letting a stop loss breathe? One can place the stop loss slightly higher somewhere over here and take a short position. As we can see, afterwards the market falls and our targets are met. Similarly, talking about how one can react near a support level. If we look at this candle here with such a long wick is an indicator that there are a lot of buyers at this level who are ready to take the market up. Even in the next candle, the market has slightly long wick, and then there is a very strong green candle. Over here would be a good place to go long, with this somewhere here as our stop loss, and as we can see in the next few candles, our target would be met. Now, once we have seen the market's interaction at this level and this level, we know that it's basically traveling in this range. So what one should look for is, anytime the markets are close to these levels again, here the reversal happened slightly earlier, here it went a little bit lower, but then it went back up from here again. what one needs to do is look for these type of candles. This one is called a hanging man candle, and these type of candles are called a hammer candle. These candles indicate reversals or a change in the trend. So if you see a candle like this forming near a resistance, and we also have the moving average over here, like this one is the perfect example here. We have three hanging man candles being formed at a resistance level, and also the moving average is right here. This area can be called a very important area of confluence, and we should see what the market acts like over here and accordingly take our positions. If I keep going forward, this support level was then broken, and let's talk here. Now, what happens sometimes is that once a resistance level is broken out, that resistance level starts acting as support. Here, what we see is this resistance we plotted was further down the line. The market was above it, it came down here, took support, and then consolidated for a while. When we take a look at the candles here, what do we see? We see lots of long wicks continuously indicating that there are buyers over here. The next day at opening, the market forms a very strong green candle, confirming the bias that there are lots of buyers ready at this price. One can go long at this price with somewhere along here as the stop loss and aim for this previous swing high as our targets. If one was to go long somewhere in this consolidation region, within the next few hours, our targets would be hit without even touching the stop loss once. So guys, that's it for this week's video. Do subscribe to our channel and switch on notifications, as we're going to be bringing you interesting content like this almost every day. Another exciting thing to look forward to is that we are also going to start bringing you content about cryptocurrencies as well. If you're interested about cryptocurrencies, stay tuned into our channel.